Hi there, welcome to a Kneppy Invest and welcome to another answer and reply video because it's a Saturday the 21st of December 2024. It won't be long before I will be saying 2024 and it's going to be the wrong year because not long to go before 2025. And I just can't believe we're almost 1/4 of the way through this century. Time sure goes quickly. Anyway, time is 10:51. And I'm going to do something a little bit different in this particular video. And I think I'll do this in future videos as well. Instead of going back a month and answering your questions that, to be honest with you, some of them out of date, what I'll do now is I'll work my way down, look at your most recent comment or question, and then work the way down. This way I can answer your questions or reply to your comments in a more timely fashion. So let's get stuck into it. And the most recent comment is from Ben Hutchinson. So if you do want your comments and questions answered in a very timely fashion, probably the best thing to do is to write them early Saturday morning, because I will record these videos probably between about 10 a.m. and maybe noon, unless I'm doing something. And if I'm doing something, more likely I'll either record them, to be honest with you, on a Friday evening or later on a Saturday. Anyway, so Ben Hutchinson is just commenting about Frontier Digital Ventures strategic review, saying he thinks they're going to sell LATAM. He's talking about how there's a bit of tensions. He thinks there's tensions between, or he senses, maybe his senses are quite accurate, there is tensions between LATAM management and the CEO of FDV because LATAM wants to grow faster than Frontier Digital Ventures can acquire valuation, facing poor sentiment on ASX. Echoes of a GDC global data center who had a basement valuation for the longest time until they didn't. Suddenly, yes, share price went up significantly. I took advantage of that. I actually think this could revitalize Frontier Digital Ventures. LATAM will sell for more than Frontier Digital's total market cap, I expect. And at some point, the economic cycle in Pakistan must turn. I definitely can see this scenario playing out. Frontier Digital Ventures will sell LATAM for a pretty good price, and the price will surprise the market, and all of a sudden Frontier Digital Ventures will have all this surplus cash, and then they'll give their shareholders capital return. I can see that happening, and if that happens, I don't want any part of it. I have no interest in capital returns. Now, that is just one scenario. There's another scenario where they get all this cash and make some astute acquisitions. Now, I do actually like LATAM. I think it's probably the best performing portion of the business, but the one thing I don't like about Frontier Digital Ventures is just the chart. The chart is ugly. I think I've already mentioned this, and I have no interest in this company just yet, and all because of the chart. So for me, Frontier Digital Ventures is more of a trading stock than a long-term hold. I was thinking the opposite over the last few years, but I've now turned I've turned this more into a trading stock than anything else. Okay, so thank you for that comment, Ben Hutchinson, and I can definitely see what you're thinking coming to fruition. Doesn't mean it will, definitely can see it. Thoughtly Photography, is it time for an update of Clinuvel? All green flags and a sustained downtrend. Is it value now? I think it's... I was going to say, I think this is deep value now. I am a shareholder and I have no intentions of selling, because even though the chart looks horrendous and it's broken through $13, which was an important level, even though, I don't know why I have a solid blue line there, I'm going to get rid of that. Even though the share price has fallen through a support level, I think this is becoming more and more deep value. So the market cap, only $500 million or $600 million. P ratio 17.1. Wasn't that long ago? P ratio of this company was 50. So I'm not sure what the market is thinking when it comes to Clinuvel. I do know management think this company is completely undervalued. And are they doing a share buyback? If they're not, they should be thinking about doing a share buyback. So even though I'm a long-term holder of this company, sometimes I just don't know what the company is doing. If I was management, I would be doing a share buyback. They're not. But I'm pretty sure they've mentioned in a few of their chair letters to shareholders that they think this company is undervalued. They probably don't know why the share price is dropping. It just doesn't make sense. And for me, this is a good value company. But unfortunately, the chart looks horrendous, and it still looks horrendous. Whenever this company releases something positive, we do see a bit of buying, and then the selling comes and rushes in, and it really overwhelms the buying. So we don't see any sort of breakout. So at 11.79, oh gee, this is such good value. I will consider adding to my holding in this company if it continues to fall, because a P ratio of 17 with pretty good growth, this is good. Now, the only problem with Clinuvel, it's a one product company. So if something does come along to disrupt that one product, then that could be trouble for this company. But they are trying to expand and diversify. So, yeah, so is it time for an update? Maybe. All green flags. What is green? All green flags. Everything's going fine for this company. And it's staying downtrend. Is it value now? And I say yes. I think this is good value, but there's still a bit of risk. And it just shows you that negative sentiment in a company can drive the share price down to the point where I think it's really good value. This could happen to most companies. Just James Dean says, still undecided on Capral. If it continues to buy back 10% a year, shares can only go up. Not absolutely true. Assuming profit is maintained. Yeah, I was going to say that things can go wrong for business. But if making assumptions, of course, we know the saying, if you do make assumptions, you can make an ass out of you and me. So assuming stuff is not the most best thing to do sometimes. So Capral for me is not a high quality company. Things can definitely go wrong for this company. We've seen it in the past. But I think the last time I looked at the chart, it looked pretty good. And I wanted to see a breakout above about 10.30, but it does look like it's in a bit of an uptrend. And we have seen the share price dip. This could be a nice buy the dip situation for Capral. According to TradingView, P ratio is 6.12, dividend yield 5.5, so it can maintain their financial performance, even grow. This company looks really good at this point in time. Thank you, Just James Dean. And talk about Just James Dean. He's saying, did you say buy Wesfarmers at 35? I would trade both my kidneys for Wesfarmers at 35. Bunnings probably worth more than 35. Get Kmart and rest for free. I was just talking about, that was like a, what do you call it? A margin of safety. And this can happen. Don't rule out the possibility of Wesfarmers halving from here. Don't rule it out. If we do go into a significant bear market, if we go into a significant recession, Wesfarmers could halve. It's a possibility. And if that sort of thing happens, I think it's very important to have or to drop a watch list of companies you would buy. And Wesfarmers is one of those companies I would buy. And $35, it would be like a beautiful time to buy shares in this company. The last time share price was 35 was, in fact, share price got very close to 35 back in June. Got to $40. That would have been a good time to buy. So during the COVID-19, the share price did fall to 30. So that was probably the last time the share price was 35. So it could get there. It could get there. I think one of the reasons why I said 35 is I just had a look at the P/E ratio. It's 32.47. And I think buying this company a P/E ratio of 16 would be pretty good. But if we do have a recession, there's a chance their profits could fall and maybe the P/E ratio could be up, but that's okay. Anyway, so that's sort of the margin of safety price I'd be looking for Wesfarmers. But of course, everyone has a different price. And for Just James Dean, that is his kidneys. He would trade his kidneys. Although, how would you take advantage? Because you'd be dead. We need kidneys to survive, at least one kidney. So Just James Dean says he's rather die. If share price of Wesfarmers went to 35, he will die to take advantage. Rick Fellion, already feeding my CDI trading account. Wait there, CDI trading account portfolio. This is my Commsec portfolio. Zeros. There it is, CDI trading account. Zeros. See, I have a margin loan, by the way, with Commsec. Zeros. Margin loan zeros. I still got a lot of notifications from Commsec telling how my margin loan thing is going. Zeros. I will also say, if I see a significant decrease in a lot of high-quality companies, maybe not high-quality companies, a significant decrease in a lot of companies, and I see value, I will take advantage of the margin loan. So that's the whole reason I had the margin loan, just in case I see we have a really big downturn in the market, and I will use my margin loans to take advantage of that. At this point in time, I don't want to use my margin loans. Anyway, CDI. Which one's a CDI? What does that mean? Commonwealth Direct Investment Account. There you go. And Rick Thelian also says MBS was supposed to be MSP. Was 252, but dropped even further to 42. Okay, that makes sense. Yes, there's no MBS on the ASX, but Mesoblast, I should have realized that. But there you go. I've already talked enough about Mesoblast over the next few days, and I've already mentioned that if Mesoblast opens not much higher than it is now, I will add to my position. I have a feeling, however, based off what happened on Wall Street overnight, we're going to have a really good day on the ASX on Monday. I think the ASX really overreacted on Friday. Not sure what caused the selling, but because Wall Street was up over 1% overnight, we have to correct. And the best day we've seen Dow Jones have for about 12 trading days. AirMac, no Rant Sally for a few years, WTF. I'm not a big believer in stuff like Santa rallies. I think it happens once or twice and people go, oh, that's going to happen all the time. I'd love to see some statistics on Santa rallies, if how often they do occur. And I wouldn't be surprised to see they don't occur all that often. And I do believe that when it does occur, we just say, look, a Santa rally, see it happens. And then when it doesn't happen, we just ignore it. We see that all the time. I see that all the time with people. I lived with a person who believed in astrology. And I'd say, it's ridiculous. And then she goes, look, it says this, it happens. But then I said to her, but you're ignoring all the stuff that it did say that didn't happen. And the other thing is they're very vague and you can draw a lot of confusion, I was going to say confusions, but it is confusing sometimes. You can have a lot or draw a lot of conclusions by what the astrology thing says. Anyway, so astrology is absolute BS. Anyway, so this is the XJO. We've been on a nice, this is the weekly chart. 2 down weeks in a row. In fact, this week or last week, down 2.76%. Yeah, it's gone down. What's that percentage change? It's gone from 8,500. Where's my calculator? So it's dropped 433 divided by, so it's gone down 5%. Not much of a correction, 5%, 5.1%. Not much of a correction, to be honest. Wake me up when it's down 20%. Anyway, yeah, I never, ever, ever rely on Santa rallies. There's other sayings like in May, sell in May, go away or something. I never listen to that sort of thing. Rick Thelian, actions happen sometimes early in the morning, saw that with Wesfarmers 7 a.m. or so. My math with the Coregas divestment is only worth on paper 770 million, including profit 67 cents per share minus tax. So he's saying this is a good deal for Wesfarmers, I think. With market saying no, market could be wrong though. Anyone heading to MCG to watch cricket bring extra money, food and drinks have increased in price. I think that's true for everything. I sometimes now go into supermarkets and just compare prices to they used to be, and I will actually refuse to buy stuff now. I am refusing to buy stuff because of the price, how much it's gone up. That's not a bad thing, I suppose. I will only buy stuff now on special, a lot of things. That's the way we are, and that's how much prices gone up and how little our wages have gone up. Well, maybe some of you out there have seen a significant increase in your wages, but I think most people haven't. And some of the increase in prices of food is just out of the park ridiculous. So I am now refusing to buy some stuff. And hopefully more people join in with me, refuse to buy stuff. And yeah, I would never, ever go to any sort of MCG or cricket venue or sporting venue concept and buy any food at those places, because the markup on prices of in those places ridiculous. Sort of like the markup in prices at service stations, ridiculous. I look at the prices when I pay for my petrol. Go, why would anyone buy this when you get it for half price at a supermarket? Yes, they'll say convenience, but really. Oh, Mesoblast, health 0 or 70585, 42,000 shares at $1. Not mad. I wouldn't be either. And the company's different now. To be honest with you, the company is different. It's a different company. Mesoblast has FDA approval. It's a different company. CMNHL waiting for Mesoblast coverage. I have given you that. And finally, 4 years later. Oh yeah, I've already answered these, haven't I? Yeah. I've answered that. Oh, hi Kneppy, love your videos. Can you make a video of the screener from start to finish without missing steps, please? Should I do this as a standalone? No, let's do it right now. Video of the screener from start to finish without missing any steps. Let's do a new screener. Let's do it. I'll put my face up there. Let's do a new screener. That moved without me moving it. Let's do an unusual volume 2. Let's do that. And we'll start off with, we'll go to another screener. And I think we want to reset all. There we go. Reset all. Okay. So, exchange, ASX, index, any. We want any. Country, well, that's, I suppose, any. Symbol type, I suppose we could choose, we'll do any here. We could choose just common stock, but I sometimes like to look at ETFs and that sort of thing. So I'll just choose any here. That's all I'm going to do. I'm going to leave everything else as is. So market cap could be anything, volume anything, average volume anything. It doesn't really matter. And then the next thing I want to do is, so you have all these ones I do like. So new month, 6-month high, new 6-month low, 52-week low, 3-month low, 3-month high. I don't use those for this one. I sometimes will include those to further filter companies on unusual volume. But there should be an unusual volume somewhere here. And of course, I won't be able to find it. Yeah, this is where I will use my other screeners. So if I go to my 5, let's start with my unusual 5. No, I don't want to say, but we'll start with this one because I've already got my screeners in there. So start symbol. So symbol type this one. Yeah, it's got common stock, depository receipts. I'm going to put anything. I'm going to put anything there. I would change that to anything. Primary listing. Actually, we haven't got the ASX here, do we? We just want the ASX. Although I've got any. Oh, that's right. I can change the indice or index right there, the market here. I do that a lot. I go from the NASDAQ or the American indices to Australian indices by clicking on the flag down here. So that's probably why in the filter, I've just got any there just because I want to change it via the screener itself. So it's just current trading day. That's the other important one, primary listing as well. So the most important thing here is, where is it? Our relative volume. That's it. Relative volume. I can't remember where exactly that is. It should be, there's probably a search function there. Relative volume. Probably could do it in there. There it is. Relative volume. And all I've done is put that at 5. And if I want to change it to 2, I'll change it to 2. And we'll see how many companies we get. 279 matches. The first one is actually CBA. So that's saying that the volume on Friday was double the usual volume we've seen over the last 30 days or something, whatever the average time span is. And you get to see there was high volume on Friday. That could be a reason behind that. BHP came in second, some high volume. There is reason. Sometimes Fridays do have high volume. Maybe options, something like that. I forget. Anyway, so I'm hoping that helps you out. It's a very limited filters, not many filters at all, just looking for unusual volume, and relative volume is the one to look for. And then you can just change it to 2, 5, 10, 100 if you want, although you probably wouldn't get many matches. So I do like 10 because at 10, you don't get many matches. All we have is 16 matches here, including Guzmani Gomez. Some high volume coming in for that company. And that's what I'm looking for. I'm looking for some high volume coming, like for Straker. This is an interesting one. Straker is showing some breakout signs here. And one of the reasons why it's showing signs of breakout is because of the volume over the past 2 months. So hopefully I have helped you with that. Where was it? Mahajan Good. Okay, Tony Ditria. Hi, great videos. Going to send you your charts. I've been buying SGLLV, which is Sunrise something something. Since your advice and thoughts on charts regarding quality companies, I think this is one. Your thoughts, please. Okay, SGVV. Well, would I consider this high quality? I haven't actually delved too deeply into SGLLV. So what I'll do is I'm going to go through FinChat and go very quickly through and this is a sort of an agricultural company, but it's an unusual agricultural company. The way it's set out, and that's why the ticker is unusual too. If I remember correctly, there's like the Ricegrowers. Oh, I forget the set out. It's a really unusual set out. Ricegrowers operates as a rice food company. The company operates through Rice Pool International Rice, blah, 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 blah. They don't actually mention how it's sort of set out the company. It's a really unusual company. Anyway, what I usually do with these sort of companies, whenever I'm researching a company, I should do this more for international companies. I've been thinking this. I want to find more high-quality international companies that are listed on in America, Europe, Japan, that sort of thing, because I want to add to my high-quality portfolio in my super fund. Anyway, so the first thing I always do is just have a look at revenue. So what I want to see is revenue growing pretty consistently. The first thing that stands out here, between 2015 and 2021, revenue didn't grow at all, but it's starting to grow since 2021. So something might have changed. They might have made some acquisitions, but what has caused the growth over the last 5 years when there was a period of time when revenue didn't grow? That would probably be my first question. Another question I would have is gross margins. So gross profit margins, fairly steady from 39.3% to 39.5%. That shows you that, yeah, that's okay. I don't mind seeing gross margins or gross profit margins being flat. In fact, you could even argue there's some signs of an uptrend in gross profit margins over the past 5 to 7 years. Another thing I like to look at is just go to look at profits. Another thing I like to look at is some of the ratios, like quality ratios. So return on equity, return on invested capital. Some of these may not be relevant for this company. Also, I like to look at P ratio. What's the P ratio now compared to its history? Is there value in this company? And just by looking at it, says it's at about 10.6 now, last 12 months. I'd also look at stuff like price operating cash flow, price to free cash flow yield is a good one. In fact, I have read some research that free cash flow yield is a good predictor for whether your portfolio could outperform the market. If you're buying companies or good quality companies, or high quality companies that have a low or high free cash flow yield compared to the market, you're more likely to beat the market returns. I have read that in some research. So free cash flow yield's pretty nice. EV to operating cash flow, EV to free cash flow. So these are all sort of valuation metrics. So I like to look at those. And the ones I really like is it's in the capital efficiency. I like return on equity, return on invested capital, return on capital employed. That shows me, I call these quality metrics. It tells me whether a company might be high quality or not. One of many though, but these are the ones I really like to look at. So return on equity, I tend to want that to be above 10, preferably above 15. And return on invested capital, yeah, there it is, the first one there. I prefer that to be at least above 10 as well. And so Rice Growers, what are they called? Both of those metrics are around 10, just below 10 for ROIC and just above 10 for return on equity. So my main question with this company is, why did the revenue not grow and then all of a sudden it's growing? Now, the very fact that this company is agricultural and I'm biased against agricultural companies, but this could be a different agriculture company. I don't know. Anyway, so that's my thoughts on the company, whether it's high quality or not. I probably could not say it's high quality right now. Now, another way I can determine whether a company is high quality or not is just by looking at the chart. And what I do is just have a look at the weekly chart. And that's the wrong company. SLGVV or something. What was it again? SGLLV. SGLLV. So what I like to do is look at the weekly chart, and that will tell you a lot. So this only goes back to 2019. So I like to look at least 10 years of history. Now, the share price did fall significantly in 2019. In fact, that was a low. Even during the COVID-19, the low in that period was actually higher. then the low towards the end of 2019. So something negative happened to this company during that period. But since then, you can see there's been an uptrend in the share price. So it's actually gone from the bottom left to the top right. Also, there's been a pretty good increase in volume since about May. That's also interesting. The share price has really taken off. So the chart does look interesting. Probably the only questions I would have is valuation. Is this high quality? Then valuation. Is there good value in this company right now? But the chart looks good. So many things to like about SGLLV. Is it just called Ricegrowers? It's interesting. SGLLV. I just keep calling it Sunrise. Yeah. Oh, that's right. It used to be called Ricegrowers, and they changed its name to Sunrise or something ridiculous like that. Anyway. And I think the most important thing here is, because we're all different as investors. We're all different how we analyze companies. And even though I am a little bit dubious whether this is a high quality company, although the chart does look good, you could have a completely different opinion, and that would be the right opinion, you could have the right thoughts. So I think it's very important to come to your own conclusion. You can draw information from other people, other sources, but come to your own end conclusion. And I think empowering people to make their own decisions is the most important thing for experts to do. Although I don't think they want us to do that. I don't think many experts want us to make our own decisions because they want themselves to make the decisions for us. But I think it's very important to make your own decisions. Anyway, so Sensei again. And Reptilian, cocoa has been 2023 I defined, but has increased again, as you said a month ago. Yes, cocoa. Oh, let's have a look at cocoa again. Just want to see if it's broken out. It was at a resistance level, and it looks like, we have to look at the daily chart. It's broken out. Oh, look at that. Has pulled back the last few days, but what a chart. A beautiful looking chart. One thing I have noticed is chocolate prices have just gone through the roof, and this is probably the reason why. Cocoa prices are really high. Reptilian, he's at Bathurst, heading home. Any thoughts of DGT? Takeover attempts by CQR of HPI, whom are advising reject offer. CQR has a 45% of shares extended offer if achieved to get over 59%. Does CQR have power to sell off as majority holder of HPI? So that's hotel property. CQR is charter something. TUA down today. IRIS sold down end of day after hours. Any thoughts on DGT? Well, that's the Digico infrastructure REIT. It's just listed, and I think it's just too volatile for me to have a thought about this company or this REIT right now. Not the biggest fan of REITs, but it's an interesting space. What else do you want to say? I'm not going to talk about CQR and HPI, although I will have a look at the charts for both. CQR is Charter Hall something, Charter Hall Retail, and what's the chart look like? I would say all these look crap. Yep, weekly chart. Do I have any interest in REITs? Not really. I'll be honest, not really. And HPI is hotel property something, hotel property investments, and this chart, to be honest, looks a little bit better. The weekly chart looks pretty good. I reckon the daily chart looks pretty good as well. I did put a breakout level right there, or a resistance level, and it has broken above that. And that could be because of a takeover bid. And what else? TUA down, and then IRIS. Let's have a look at both of these companies. TUAs, and chart still looks pretty good. I like this chart. This is one I am trading. I got in this one really late, 380, when the breakout happened in early 2023 at a share price about $1.60. Yes, I got in this way late, but even though I got in late, I'm still up a fair bit. Not quite 100%, but it's moving that direction. And even though the share price has pulled back, share price went up on Friday. That's pretty good. The overall market was down, and the chart still looks really good. And the other one what was the other one? TUA and IRIS. This company just reaffirmed guidance. Share price had been slipping, and I think the management just went, why is the share price falling? We should just reassure the market that everything's going to plan. And the share price did pop up. I'm not the chart he's a. I think this company is doing fine right now, but the market is just really skeptical about this company for some reason. Anyway, let's go back to questions and comments. Your thoughts on WA1 and EZZ, please. Yes, okay. I'm assuming you mean, well, I'm only going to look at the chart for WA1 Resources. It's a mining company. I'm pretty sure it's still a mining exploring company. This could be a really successful company. It may not be. And I'm going to be honest with you. I am trying to stay away from mining companies. I have come to the conclusion after looking at some of my results and performances that I do or tend to do worse with mining companies than non-mining companies. So it means I should probably stick to my strength, and my strengths are not mining companies. For some reason, I just don't do well with mining companies. The times I do well with mining companies is when the underlying commodity is at a low, so it's the bottom of the cycle. So that's when I will do well with mining companies. So I'm trying to unwind all my mining positions. I'll stick with a few, but I just don't do well. Anyway, this is a gold company. I think gold exploring company. Chart. So there's a few things to like about this chart, probably a few things not to like about it. Share price in a beautiful uptrend. The time to get into WA1 Resources was back in 2022, October 22, share price went up 418.52%. And I can almost guarantee you there would be some experts out there, I'm thinking of a few, and I know they would have said this. Oh, you've missed your boat. Share price is already up. You're too late. There's no point. You've got to get in before. You've got to stay with the company and just, have shares in the company for years and years and just wait for the share price to go up. You're too late. So that would have been some people who thought that on the 26th of October 2022, share price went up 418.52%. Obviously, the company released something really positive. It would have been drilling results, and the share price just kept on going up. You could have bought on that day at closing at a share price of 70 cents, and you've done very well. So, and you could have bought within the next 6 or 7 months at, share price about $1, between $1, $1.50, and you've still done it very well. So don't be nervous. Don't be shy of buying into a company whose share price has increased significantly in one day. It more than likely means the sentiment in the company has shifted from maybe neutral, negative to positive, and the company's just changed. Now, all good times eventually come to an end. Well, mostly. Well, that's not absolutely true. If a company is really high quality, good times can last forever, or maybe not forever. But anyway, so share price was in an uptrend from the breakout in 2022 all the way through to probably mid this year. I don't think it's in an uptrend anymore. Share price is probably going sideways right now, and the next move could be up or down. So I'd say the share price is trading in a range, not a perfect range, but it does look like it's trading in a range. And if I had to put the top of the range, I'd say it's probably about there, sort of like a zone. And the bottom of the range is probably there. The top of the range is not perfect. The bottom of the range is almost perfect. It's hit it twice. So what I'll be doing is, if I was trading this or wanted to trade this, if the share price broke above the top of the range, that would be a good move. If it broke below the bottom of the range, that would be a bad move. That's how I would look at this chart at this point in time. Which way it's going to go, I have no idea. And honestly, no one out there has any idea, because we're talking about the future. This company could release something really positive tomorrow. Well, maybe not tomorrow because it's Sunday, but on Monday, and the share price could go on a massive rally. Or the company could release something really negative. Or maybe gold prices drop or halve from here. I don't know. And that would force the share price down. So that's another reason why I would not be in this. I just don't know which way it's going to go. Now, if you have way more conviction than I would have, and you think this company is good value, really good value, if you're very bullish about the future of this company, yeah, maybe now's a good time to buy, because it's near the bottom of the trading range, or it could be just good value. The other one was EZZ. So I did take profits in this one recently. I took profits in this company at 460. It was just getting to, at that point, it was getting to, the share price increase was getting it was overbought. Put it that way, it was overbought. I actually am going to put in RSI just to see if I bought it when I thought it was overbought. And I don't need to look at RSIs all that often because it's fairly obvious when a company is overbought or oversold. I don't need RSI to tell me that. So I bought or sold on, it was 460. So it was, yeah, it was either on the 2nd, 3rd, or 4th of October, 460. And, oh, where did RSI go? What happened? There we go. And yeah, it was overbought at that point in time. So again, I don't need to look at RSI to know if something's overbought or oversold. Now, EZZ was getting very close to being oversold on the 3rd of December, within 2 months. And that's when the share price was 240. And I was thinking of buying back in then. And then I did put this downtrend line in, and the share price went above that downtrend line on the 4th of October. And the share price is showing signs of moving up from there. I think this downtrend has come to an end, and I think the share price is now trying to move up. So that's just by looking at the chart now. And I'm willing to, I didn't completely take profits. I still have a trading position, and I'm willing to add to my position in EZZ just because I think its share price has reached a bottom. Otherwise, financially, I like this company. I like the potential growth. I think there is potential there, a little bit too over-reliant on China, but I do like this company. They're dividend paying, they're growing, so there are things to like, and I don't think it's over. It's when I compare it to Biome, BIOME, I think this company has much better value at current prices. So EZZ, 124 market cap, Biome, which is not profitable, by the way, and I don't think it's growing as quickly as EZZ, has a market cap of 115, so fairly similar. But if I had to choice between the two, I'd probably choose EZZ because it's just profitable. It's also paying a dividend. Anyway, so I think we all have our biases, and that's my bias, EZZ over Biome. So thank you for those two questions. Forley, oh, this is one I was going to do a standalone video on. I might do that. Because this will take me a while. I think this is a good answer. What I want to answer, or how I want to answer this one, is a good one. So I just want to do a standalone video on that. So he just mentions PPE, which is is a slim profit margin company with heaps of staff. Exactly what Kneppy doesn't like. Exactly. But there's a big but. PeopleIn is not a company I'd own for the long term. It's not a high quality company. It's only a trading company. I'd only trade it, and I'm seeing things to like when I look at the chart. So why not take a trading position in the type of business you like? Well, because there's opportunities out there. And now there is, so I will trade companies I like, but I prefer to own those for the long term. And I'm more willing to trade companies I don't really like because there's always opportunities out there. But I will trade companies I do like, but I prefer to own those for the long term. PeopleIn is probably a price taker that is vulnerable to government policy. Absolutely true. There's many things about PeopleIn. In fact, I'm answering our question here. There's many things to not like about PeopleIn. And there's many reasons why I would never own PeopleIn as a long-term hold because it doesn't have the characteristics of a high quality company. Slim margins, it is vulnerable to government policy. It's not an area I like, that sort of thing. But I'm willing to trade it. Now, I've successfully traded quality, non-high quality companies, bad quality companies, low quality companies like PeopleIn, really successfully. And one of them is AMP. So you'd hear people saying really bad things about AMP. They're still saying really bad things about AMP, but when you look at the chart, there's things to like about this chart. And in fact, I bought $1.30. Share price has gone up. What's that? 13.26 has gone up 20% since I bought. So I could be up 20% in a company called or like AMP that has significantly destroyed their shareholders' capital over the past 10, 20 years. So when it comes to charts, I try to leave my bias in regards to the company out of the picture, out of my decision making. So I will trade companies I don't like, including AMP, including what else? I'm probably trading quite a few companies I don't like at the moment. Oh, there's a few companies I do like here. There's a few companies I do like, but I've traded Blue Scope Steel successfully. South 32. What else was there? There was South 32, Blue Scope Steel. I've traded Fortescue. There's many banks. I've traded banks before. Anyway, so what I want to do when it comes to trading is leave my biases out of it in my decision making. And it is I wouldn't say a problem, but on occasion I will look at a potential trade and I'll just think, oh, I don't like this company, and I will sometimes take that bias and then not make a decision because of that bias. So I'm trying to leave that bias out. So hopefully, that's answered your question. But there's also credence to what you're saying is maybe only trade companies you like. But again, I think I prefer to own those companies I like for the longer term, and those are high quality companies. And I'm still willing to trade those companies. But I see a lot of opportunities out there, and I'm willing to trade anything. So let's have a look at people in right now. Why am I talking about this crappy company? Oh, by the way, I've traded this before in the past. It was a risky trade. I expected a bounce off $1, and it bounced. And the main reason I thought it was going to bounce is because look at the volume coming through. And it bounced. It actually went from $1 to a high of $1.38, but I sold it before then. I sold it at about $1.20, was it? Yeah, about $1.20, $1.25, which is a really nice 20-25% profit on this sort of chart. Absolutely horrible chart. Anyway, share price broke below $1, which is a fairly important psychological level for a lot of companies, but it is a psychological level for people in. And we can see that the share price actually has bounced off $1 once, got back to $1. In fact, it goes all the way back to COVID-19. The share price bounced off $1 in COVID-19. So that's another reason why this is a significant psychological level. And then when it did fall through $1, you can see it when it hit it, went back to $1 in February of last year. Actually, that's this year. It didn't really bounce, which tells me it's going to break through or below $1. And it did it a few months later. And then you can see a nice little rally in the share price. And what price did the share price get to that rally? The high? $1. And then it pulled back. And you can see the low, the next low was the same level as the previous low in June. And then the next low was a little bit higher. And then you can just see the short-term moving average channel starting to change, starting to become a little bit more favorable. And we can see the share price rally really a significant amount in 4 days at the end of November, start of December. And instead of the share price pulling back, share price went sideways. Now, the share price is struggling to get above $1. It got above $1 once and then pulled back on that day. So $1 is a really good breakout potential for people in, even though I would not classify this as high quality. This will just be a trade, but I do like the chart. And that's the other thing. I do see a lot of really good looking charts with low quality companies. So many good looking charts. Anyway, so I was going to do a standalone video on this one, but I've just answered right now. It definitely needs to increase its profit margins. Well, can it? That's the other question. Can it? This Wednesday, Chalmers will release budget update. I'm pretty sure he has an L there. I have no idea. Yeah, he probably did. I'm pretty sure he said, didn't he say something, if they weren't in government, we would be in a recession right now? God, the vanity. Devshah says, hi, Kneppy, at 10:45, what I meant by no offense is if anyone from African countries reading this may find it offensive, but the reality about yeah, okay, yes, I understand that. But I will say that about China. I will refuse to buy any companies that are listed on the ASX that are China-based. I refuse to do that. And the main reason, just like you, I personally didn't have a bad experience, but I was following a few companies that looked really cheap in 2015-16. I was like, why are these companies so cheap? And one after the other, bad things happened to these companies. I think they were just frauds. Well, maybe not frauds, but the holders of the companies, because they were in China, saw a way to get their money out of China into the Western world via listing the company on the ASX and then selling their shares in Australia, and they can get their money out of China. And there's one company, I forget what it's called. It was a clothing company. Share price was like 25 cents. Within days after they listed, share price plummeted from 25 cents to like 2 cents because all the Chinese shareholders sold out of the stock or their shares. And the company looked so cheap. They also said they had, I think the market was like $10 million. They said they had $30 million of cash, and they kept saying they were going to issue a dividend. They never did. And then eventually the company just disappeared. Funny enough, it just disappeared. Just went bye-bye. Anyway, so look, no one can draw any offense. No one should. And I would also say if anyone was offended by your comments, I would be offended by them being offended. And so I just don't like this. We don't want to offend anyone with what we say. That's offending in itself. I think everyone should just grow up. Well, not everyone, but people who are complaining about, like comedians complaining about jokes, making fun of people. That's the whole point of comedians. Jeez. So Devshah bought Leo Lithium at 116 and soon it dropped to 50 cents just within a month's time. Or Mali, yes, Mali. So many of these countries in Africa, Western Africa, dodgy as heck. Suspended since September 2023. Eats day traders for breakfast, or BF. Maybe it's boyfriend. Day traders for boyfriends. You previously mentioned that you would buy only 1% of total portfolio value on any stock, assuming you have invested 1% on SKS Technologies for the first time, and later you saw pullback and decided to purchase more. How much furthermore would you add to your position? Okay, so 1%. I'm going to think right now, is that right? Actually, it is right. Yes, it is actually right. So when I first make a position to take into a company, it's 1% at a maximum. And then the thinking is, if the company keeps on proving itself, I will add to that position. Sometimes I don't have to because the share price keeps on going up. So my biggest holdings right now are those companies whose share price keeps on going up. So those holdings are now getting to as much as 2 to 3% of my total portfolio. And people say, you should only own 20 stocks in your portfolio. That's absolute BS. It's wrong, absolutely wrong. People have said to me, you're only going to get the market returns if you invest in more than 25 companies. No, because many companies I own are small caps. And in America, most of the companies I own are the tech companies, and they're doing much better than the overall market. So I'm outperforming the market. And if you own a lot of small caps, then you don't see the portfolio's performance is going to be completely different than the market performance, because the market is weighted to the bigger companies. In Australia, the bigger companies are the banks and BHP and mining companies, and I don't own those companies because they're low quality. So I own quite a few companies, way more than 20, 25. And if you ever read or look at some fund managers, some of the most successful fund managers, they own well over 100 companies in their portfolios. Yeah, so that 2025 is absolute nonsense unless you're only willing to buy companies within the ASX 100. Then it makes more sense. Anyway, so assuming you invested 1% on SKS for the first time and later saw pullback and decided to purchase more, it depends. I will do that for a high-quality company, not for a non-high quality company. So the whole reason behind that is high quality companies, it's all based on valuation. So if I see the share price drop and I think there's better value, I go, "Ooh, lucky me, I can buy this high quality company at better valuation." But if it's trading stock and if it's not high quality, I'm only trading it. So SKS Technologies for me is not a high quality company. So if I took a trading position in SKS and I saw the share price drop, it might drop below my sell price. There's a chance I just completely sold out of that trading position because I might have bought at the wrong time. I mistimed my entry, that sort of thing. And if I see the share price pull back, I've timed it wrong. And if it pulls back enough, then yeah, I'll sell out that position. So I will only average down if it's a high quality company. If it's not, no way, Jose. Hopefully I've answered your question. Gazbo +1 for Sigma deep dive. I'll do that. When we get more information on Chemist Warehouse. QBE hit resistance and immediately rejected. Let's have a look at QBE. I am trading this one. And this is one where I'm willing to be patient. I probably got in too late for QBE. Yeah, so it broke out. It's a little bit late. I should have bought probably on the 13th of November. I bought a few days later. Share price has pulled back, and then we saw a pretty good day on Thursday, up 2.1%, down a little bit on Friday, but I would expect the share price to keep on going up from here, particularly if interest rates aren't going to drop all that much, if at all, in Australia. Insurance companies should benefit from that because they have a lot of their funds making money. A lot of their insurance stuff making money. Anyway, so QBE, if you have a look at the weekly chart, so the weekly chart looks pretty good as well. It's a nice looking weekly chart. The last time share price was this high, by the way, was way back in 2010. So the weekly chart looks really good. In fact, you can just see it. There's no way anyone should have been holding this company for probably 16 years, maybe even more than that. And it started to turn around. It showed signs of turning around in 2019, but that failed. That was just prior to COVID-19. And then finally showed signs of turning around in 2021. And the uptrend has continued for the last 3 years. When do we get the portfolio reveal video? I've already done that, haven't I? I did that the other day. Top 20, was it top 20? My top 20 holdings as of November 27, 2024. Is that what you mean? Hopefully that's what you mean. Just James Dean says Macmillan Shakespeare took a beating yesterday also. Okay, let's have a look at Macmillan Shakespeare. Pretty sure I looked at this the other day too. Would I be thinking about buying this? And the answer to that is no. It's in a downtrend. It's just moving into a downtrend. I would not be interested in this unless it was a really good support level. I suppose right now is a sort of support level. Sort of this zone is a support level. If you go back to, about 2021. Yeah. In fact, it's actually interesting. So it's at a support level. And if you draw an uptrend line from the lows of COVID-19 to the next low in June 2022, the share price of Macmillan is right at that uptrend line. So it's at a support level and it's at this uptrend line. So this could be an interesting trade just because of those two things. How do companies manage to successfully raise funds through equity raisings when the share price often falls below the offer price on the announcement of the raising? Algo manipulation, says Rick Daniels. The VWAP is still high, but the drive is priced down so they can buy at a lower rise. I would actually say that if you do own shares in a company that is capital raising and their share price falls below the capital raising price, I would never buy shares or take part in the capital raising. You can just buy shares on market. But I have heard one shareholder say, I would much rather participate in the capital raising than buy shares at a lower price because I'm helping the company. So there are those shareholders out there who believe if you do participate in the capital raising, if share price falls below the capital raising price, that they are helping the company. So don't discount the amount of those type of shareholders. I would say there are a few shareholders like that. But definitely if the share price is much higher than the capital raising price, you'll see much more support. And in fact, I have participated in those sort of capital raisings in the past. I think the last one was SRG, where the share price was well above the capital raising price. It was a no-brainer. So otherwise, I don't see why. And the funds who participate in the capital raising, and if they see the share price fall below, they go, damn it. And there's a chance they might sell. More on Midway, thank you. Well, isn't there a takeover bid for Midway? I'm pretty sure there is a takeover bid, which automatically means I'm not going to look at the company or the chart. So I'm pretty sure there is a takeover bid, the scheme booklet, scheme meeting. Yeah, so I'm pretty sure there is a takeover bid. Scheme implementation deed with River Capital. So as soon as this sort of thing happens, I don't follow the company anymore. And you can just see that by the chart. This is the chart. This is, oh, what's happened here? Something happened on the 13th of December. Before that, that is a chart of a company going through a takeover. Just see how the share price is just going sideways. And then something happened on the 13th of December. What happened? 13th of December, market update. Oh, that's right. That's right. They released a negative market update. And so they're going through this takeover offer. And I saw that market update and it's negative. And I thought, is this going to put this takeover under, or put this takeover bid into jeopardy? Because why would this company want to take over this company if they're not performing as well as they probably expected? And I think that's why the share price dropped. Yeah, that's the only reasons I can think the share price dropped. Anyway, that's what I'm going to talk about when it comes to Midway. And there's Sensei doing all these emojis, whatever you call them. And I usually apply to him with other emojis. All right, I'm going to finish. No, I might go back. No, what I'll do is I'll go, because I'm back now 9 days ago. So I'm up to date now. Kneppy have not been keeping tabs on the market for a couple of months and just getting my bearings again. Wondering if you've done a recent-ish update for SXG, Southern Cross Gold, or JBH. Okay. Okay, so two things I'm going to do is for Southern Cross Gold, I'm pretty sure that's what it is. I'll just look at the chart. Otherwise, I don't know anything about the company. JB Hi-Fi, I'm going to do two things with JB Hi-Fi. I'm going to look at the valuation as well as the chart. So Southern Cross Gold, there's nothing really to say anything about this chart except being positive. It's a beautiful looking chart. Share price broke out, looks like on the 5th of September 2023. Share price about 80 cents. You would have done really well since then. Would there have been any reason to panic after you bought? You notice the share price went sideways after that big day. Share price went up 52%. That's exactly what I'm looking for. When you see a really good announcement from a company and the share price goes sideways, or even goes up a little bit, doesn't drop, that's usually a good sign. And as soon as the share price reached this long short-term moving average channel, you can see it starting to go up. And just keeps on going up. There was a period of time here when the share price pulled back over about a 3-month period. Share price went from $3.40 back down to $2. So a lot of shareholders probably would have sold out, took profits during this period, but then they went back to moving into an uptrend just after that. So nothing much to dislike about Southern Cross Gold. And I'll be honest with you, this is the only thing I know about this company. It's just the chart. The chart is pretty good. Now, JB Hi-Fi chart also looks really good. It just keeps on going higher. Now, a little pullback in the last few days, but that's okay. This is a beautiful looking chart. I was a shareholder of this company. I bought some shares at about $40, I think. Actually, no, I think it was even before that. I think it was lower than $40. I still remember buying shares in JB Hi-Fi because the P ratio was like 7 or 8. And I was like, okay, this is exactly what I'm looking for. A high quality company that looks really attractive valuation-wise. And going back to my roots as a value investor, the chart did not look good at that point in time, but I thought it's good value. The market was negative on these type of companies. Their revenue is going to drop. And then look at the chart since then. Absolutely beautiful chart. And I made the wrong decision. I took profits at $80. Took profits at $80. Second time I've done that. First time I did it, I regret it. This was way back in 2012 or 13. I should have just maintained a holding. Now, my reason I took profits is the same reason I initially bought in. At that point in time, I saw valuation. Right now, I don't see any good valuations when it comes to JB Hi-Fi. P ratio is 23.55. So if we go back to FinChat, and all I'm going to do is have a look at the P ratio of this company over the past 10 years. I wonder if you could do this in TradingView. I'm pretty sure you could do this in TradingView. I'm just going to see if I can. So if you look at the P ratio over the past 10 years for JB Hi-Fi, typically we see the P ratio get to about 20, and that usually is the high point. When I bought, it was about 8. I still remember that thinking, gee, this is cheap. Now it's 24. So one of the reasons why the share price has increased significantly since I bought is because of margin expansion. P ratio has gone from 8 to 24. There's been some financial expansion, but not a lot. So the sentiment in this company has gone from pretty mediocre sentiment, pretty low sentiment, to really high sentiment right now. And that is a little bit concerning for me. Now, the most recent trading update was really good, I think. So that does actually give some credence to the increase in share price. But my first concern right now about JB Hi-Fi is the valuation, 24. You're not going to see much margin expansion from here. So JB Hi-Fi has to increase their profits to justify the current share price. Can it? Yes, it can. So there's also the possibility share price might go sideways for the longest time, sort of like Microsoft did between 2000 and 2013. The company grew during that period, but the share price went sideways, and that was a period of margin contraction. So there is a chance that JB Hi-Fi share price could go sideways, even though they are growing, and the company goes through a period of margin contraction. So P ratio goes from 24 down to 20, 16, 14, and then maybe in 3 years' time, we're back to JB Hi-Fi having a P ratio of like 12, even though share price is still like above 90. That could happen. So there's many ways this can go. But I think the good times for JB Hi-Fi more than likely have come to an end just because of the valuation. But again, I could be wrong. I'm just going to see if we can put VP ratios in P ratio in trading view. P ratio, yes. Oh, yes. I have a feeling this goes back even further. Yes, it does. Oh, I like this. So in 2009, the P ratio of JB Hi-Fi was at its peak. Oh, this is great. This is awesome. So in 2009, November 2009, the P ratio of JB Hi-Fi got to 26, and that coincides with the peak in the share price. And when I bought JB Hi-Fi back in 2012, the P ratio was 8. It was the most shorted company on the ASX at that point in time, and the market was wrong. And then I sold at profits, and yeah, this is the highest the P ratio for this company has been since 2009. And if we go back to 2009, how long did it take for the share price to get back up to that level? So November 2009, and the next time share price got to that level was in 2016. So 7 years. It took 7 years for the share price to get back up to that level. Not going to say that's going to happen again with JB Hi-Fi, but it could. We've seen that happen in the past. So that's my one only sort of red flag against JB Hi-Fi. It's just the valuation. Just the valuation. I'm going to end it there for this video. If you have any questions, any thoughts, leave it in this video and I'll get to it next week at the latest. Anyway, so in fact, next week it should be the 28th. Yes, after Christmas. Anyway, if you have any questions, leave in this video or not, or another video. And don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.